Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It's Wednesday, and we're still in this bear market rally. I mean, I think this is a bear market rally. We can't tell, but we definitely had some nice strength today. Really interesting story coming out of China. I don't know a lot about this. So I just got this on my Twitter feed, but interestingly enough, it looks as if they are not allowing people to withdraw money from banks in China. That's what I'm hearing now. It looks like a bank run, and as a matter of fact, they have encircled the banks in at least in Henan, which is not on the coast, but they've surrounded it with tanks, not allowing people to get their money. I mean, this is very interesting. This is a very interesting development because this could be the beginning of a bank run in China, and that would be very, very bad for the world, obviously, because, of course, China owes a lot of external debt, and, of course, that would not get paid, and that would, that might further, exacerbate the inflation problem in the West because of the supply chain issues, and also cause some havoc for a lot of the banks that have lent China a lot of money. So we'll see what goes on here, but we've kind of a disturbing development in China, and that is, they're protecting the banks from withdrawers, from people that are going to withdraw money. They've declared that money in a bank is an asset that is owned by the bank, not by the depositors. This is why you got to be super careful. I'm seeing runs. We had runs on the crypto people, and I think that's still in situation. If you do have deposits, make sure that they're in separate accounts, no more than $250,000 in each account. And the reason you don't want to do that, of course, is because, at least in the U.S., that is where the FDIC insurance cuts off. So not a good sign. We're in an interconnected world now, and that could be a big issue. I just wanted to show you my current holdings in the small portfolio. I did add a company, Insight Corporation. It's up a little bit today. Not a whole lot. Nice volume increase there. But really basically have CRISPR, which is, of course, a biotech. Dollar Tree, which, is a good place to shop if you're looking for bargains. Lantis Holdings, this is a medical software company, and Insight. Most of the action, at least in the last few days, has been in the medical area. That's been where the strength has been in the market. So I want to show you how the small portfolio is stacking up. I have about half of it now. Half of the 12 portfolio is invested. The rest is in cash. And basically in the last 6 days, 6 or 7 days, I've been coming into the market. The number one, of course, right now is this Lantis Holdings. It's up about 3.4% in 3 days. So that's pretty good, about 1% a day. We will see. We'll be pushing our stop loss up. This is a swing trade. I plan on holding this a whole lot amount of time. We're up on Dollar Tree, and that's a nice stock as well. Not up as much, about 1.79% in 6 days. And then Insight Corporation, that's the one I just bought today, almost even. And then, of course, CRISPR pulled back a little bit, and it's basically even, pretty much even. Wanted to put a stock up there in the spotlight. This is the first of the semiconductors that we've seen that at least I'm thinking is strong enough. It's a relatively cheap stock. It's called P-Tech. That's the symbol on it. I'm sorry, P-Lab, P-L-A-B. They make masks for semiconductors. This is a big area, very interesting area. It's a $21.50 stock. It's looking very nice. The setup looks pretty good. It's a 99 composite rating, which means that it's in the top 1% of all stocks now. It's 100% rating on the O'Neill checklist. There is a buy point at 2030. Currently, it's at 21.56. So this is one you might want to put on your radar screen here. It's P-Lab, P-L-A-B. And it is, I believe it is purchasable now, depending on how the market opens tomorrow. I think with this Chinese news, we may have some contagion here. So I wouldn't buy it within the first 30 minutes, but this one probably pretty good opportunity here going forward. Well, let's get to some of the questions real quick here, and this is about the spider and the QQQ. Well, first of all, let's look at the gold fix. I want to take a look at that one just real quick, just to show you kind of how gold has been, interestingly enough, kind of moving down. I expect that we're going to see a spike in gold prices based on this Chinese news. Who knows? But currently, gold has been pulling back, which is a kind of deflationary, interestingly enough, at least in asset values. So kind of a strange thing going on there. All right, let's check out some of the TikTok people. Thank you for staying out with me. Let's check out, this is TIP. I don't know this stock. Let's take a look at it. TIP, and that is iShares bond fund, and it's been pulling back as of late. I'm going to go here to the daily chart. This doesn't surprise me that we have a downward trend in the bond fund, of course, because as we know, interest rates are going higher, and if and when we all went back to the college finance classes, we all know that when interest rates go up, bond prices go down. So that's not surprised that this has been pulling back. This one has been pulling back. Would I buy it here? Probably not. You would think the others could be more. The interest rates are going up. You would think people would buy bonds, but that doesn't work that way. They're inversely correlated. When bonds go down, the bond values go up. Now, we might want to look at one called the TBT, and that is a inverse of the 30-year bond. That one probably is making a nice move up, as it definitely is today. Well, we had a pullback, so let's see if I can get some of the markups out of here, just so we can kind of see. It's been pulling back, and it may pull up. So would not recommend a bond fund right now. People with bond funds are probably going to get their hat handed to them in the next few weeks, my guess. I would not recommend a bond fund right now, just because that's the way it's going. All right, QQQ, and the Qs are up today, which is nice, but down after hours. They're trying to make a little bit of a headway above that 50-day moving average. We were up nicely today, almost 2%. 1.57% to 302 on the QQQ Trust. So that's actually looking pretty good. Now, the interesting thing, the biggest component of the QQQ is Apple, and that one, has been pulling back. So the question is, what is happening? Well, what I believe is happening is that we're seeing a lot of bottom fishing. People are coming in and they are buying some of these very, very beaten down stocks off of the bottom. That's kind of what I think is happening, because the QQQ basically is the NASDAQ 100. It includes the largest 100 stocks in the NASDAQ. So that's kind of, I think, the reason for the action there. Would I buy it at this point? Well, I don't know. It's I'm so up in the air in this market. It seems to be one way. It seems to be going back and forth, kind of like a ping pong ball. I'd probably wait a little bit on this one. Obviously, it's the Qs. So I don't think I'm really that interested in buying it yet, because most of the tech issues are in the lower part of the range. Most of the tech issues are. Most of the tech issues are in the bottom third of the market. So I would not probably be a buyer in that area right now. Let's look at the spider. Of course, the spider's a little bit more broad-based. And, of course, that is the 500 largest stocks. It's really the Fortune 500. That's really what you're talking about with the spider. Similar chart pattern, but I think this is a little bit healthier chart in that it's moved above the reversal line. Now, I was thinking that this was going to move down to about 320, and I still believe that. I do kind of believe that we're in a little bit of a little bit of a bull. We're in a little bit of a bull market, just short bull market. This is a relief. I think it's a relief rally, because I do think we're going down further. before November. I really believe that. But right now, moving up very, very nicely. So thank you very much for that. Oh, hey, thank you, man. The Dollar Tree. Dollar Tree. Why is Dollar Tree doing so well? I don't know why Dollar Tree is doing well, but technically it looks pretty good. Let's look at DLTR and Dollar Tree. And if you've ever shopped there, it's kind of a fun experience. They've got some good stuff. Part of what I do is, especially with these retailers, I like to drive around and see how many people are in their parking lots. And I tell you, there's a shopping center near where I live. It has a Kohl's, which is a symbol KSS, and then it also has a Dollar Tree. And I tell you, the Dollar Tree lot's looking a lot better than the Kohl's lot. So, go figure. Anyways, nice. Yeah, I think this one has a little bit nice. This should run pretty nicely. We will see. We definitely have a very strong relative strength, 98. This puts it in the top 2% of all of the stocks. Look at this relative strength line. I always like to show you that because that is very telling. It's moving up, whereas, and I don't think, did I see it? Is it? I don't know if I can see it. Yeah. There's it's so far down. This black line here is the S&P 500 line. You notice how that's moving lower, and the relative strength is moving up. So this is moving up against the S&P 500. So not only is it in the top of the market, but it's also very strong on the top of the market. So yeah, Dollar Tree seems to be doing okay right now. I haven't owned it all that long. It's just really a swing trade for me. I do think it's gonna run out of gas, but at least for right now, it's looking pretty good. There's a cup with handle buy point 166.25. 166.35 is the pivot. Now, what do I mean by pivot? Boy, I know that's a loaded thing. Stocks, what they do is they move up and then they form these bases and then they move up again if it's a strong stock. That's kind of what's happening here with Dollar Tree. It came up here. It went through this period called the consolidation. This is a consolidation pattern. Then it moved right back up here, and then it pulled back, and then it moved into this consolidation. Basically, what's happened here is that this broke a downward trend. Dollar Tree did. There's the downward trend, and you notice it gapped up, and then it moved past the pivot, and so it's a pretty good pattern. Now it may run out of steam, so what I'm doing is I'm continuously pushing up my stop loss. But let's kind of take a look, see kind of where I got in on that one. Oh, yeah, there we go. Okay, putting my marks here. My stop loss, 163 currently. I'm going to be moving it up probably from that. And you can see I got in right as it pushed past the pivot. And we're still in the buy zone. So this is still buyable, but not for very long. I think maybe 1 or 2 days it's going to be buyable, and then it's not going to be. Here's the thing when you're buying a stock like this, especially when it's moving up like this, try to buy it within 5% of the buy point. And the reason for that is that if it gets too far above that, it becomes extended and it can pull back really sharply on you. But thank you for that comment. I really like that. Thank you very much. Thank you very much. Is this a bear market rally? I think it is. I think it is. I think we're still in the bear market rally. I really believe that. Now, hopefully it'll continue here for a few weeks. I'm hoping. And then it'll pull back again. It's just a tough market. I mean, it's not easy. This is not an easy market to trade in. Not at all. Jace asks, can we be bullish on this, or it's just going to sell off? Well, I wish I had a crystal ball. I really do, but I think this is going to be. I think we're going to see some strength for a week or two, and then I think it's just going to pull back. That's my guess. Yeah, that's my guess. So I'm trying to make hay while the sun shines. We'll see how that happens. And Lisa's asking, is CRISPR still a good buy? It's funny. I entered the stock, and then I've been adding to the stock, and now it's pulled back to kind of the pivot, but it probably still is. Let's see if it's in the buy zone. I just want to check on this one. Crsp. This is the Swiss biotech company, and this one isn't quite as good a setup as Dollar Tree, unfortunately. I wish it was. This is not quite as good a setup of Dollar Tree. It's starting to get a little bit weak on the relative strength line. At this point, I probably would hold off on it because I think it's adjusting itself down to the 10-day line. I bought it basically at at 82.25, and look, it's all come all the way back down to 82.30. So it went up, and it hasn't really made any progress. I think it's still moving up, but looking at this relative strength line, I think you got to hold off on this one. I'm going to be setting my stop losses tighter on this one. I'm going to be moving them up a little bit, but it's just one of those things where it's just not. It's just not as easy to come in and out of as we'd like. But Dollar Tree is definitely set up better, at least for right now. The question is, here we go. Global Traders is asking, Jim, what strategy are you using? Well, I actually use CanSlim trading strategy. It's interesting. If you want to see the charts, my charts markups, it's very easy to do. Just jump on over to YouTube. Just go up here to the my link to my profile. Click on that, and you can jump right over and see what charts I'm using. I can't show them, unfortunately, on TikTok. I wish I could, because I have a lot of people that'd love to show this. How is team looking? This is a question coming in from TikTok. Raven2342. That's the username. So let's look at team. That's Atlassian, of course. Good stock. Well, it was a good stock. This one has been a little bit of a trouble. In this market, it just, again, just tough all the way around. Oh, come on. Oh, there we go. Okay. It just won't let me hide it. Okay, come on, try it again. There we go. All right, this is Atlassian or team. And the question is, how is this looking? Well, unfortunately, team is still in a downward trend. Now, there are some bottom fishers here that are buying teams. So it's definitely there are some people that are bottom fishing. But here's the thing about team. I'm drawing a reversal line here, and I'm trying to show you the direction that this is going in. Now, it seems like you would think it would be easy to find direction, but believe me, it gets difficult. When you start putting a lot of these factors in here. Currently, team is in a downward trend. Now, even though it moved up today, it moved up significantly, 11% to 213.04. It's still in a downward trend, and the question is this a dead cat bounce? I think it is. My guess is this is a dead cat bounce, and that this is the monthly chart, and you can see we're way below the 30-month moving average. So right now, at least for now, we are starting to see some, it is starting to see gaining some strength, but it is still in a downward trend. If we go to the 30-day chart, we have a situation where it's absolutely clear that we are still in a downward trend. Now, it is making an attempt at a reversal, and I think a lot of the things are really good on this, and it does have cash flow. But if we look at the fundamentals, and this is for fundamental analysis here, unfortunately the profits are down, and that's kind of the kiss of death in this market. We also have extremely high PE ratio of 115. Now, normally in a growth stock, in an environment where we have almost nearly zero interest rates, this is not an issue. But because interest rates have been going up, PE ratios have now become much, much more important in analyzing an overall health of a stock. And right now, Atlassian, unfortunately, has a very high PE ratio, which means that in the future, they're looking for it to make profits. But the thing is, if it looks like 6 months are out, it's not going to make as many profits. That's when you got to worry. And right now, fundamental analysis, especially PE ratios, are important. So growth stocks that have high PE ratios are dangerous in this environment. Now, normally they're not, but in this environment, they are. So here's the thing with team, and this is Atlassian. I think you got to be very careful with this. I don't think it's a buy right now. So team is not a buy. Even though it had a very nice move today, I still think that team is not a buy, and I think you'd be really, really careful with this. Just based on the chart action. So that's kind of what I kind of how I'm looking at it. All right, let's look at. Let's see. Okay, there we go. Hey, is this a bear market rally? Absolutely. And then Jay. Oh, yeah. Okay. Still, I think you got to hold off on buying Crisp right now. It just doesn't look as good as it did a few days ago. Still good stock, and I'm still holding it, but I wouldn't add to it here. Let's look at NLY. Let's look at that. NLY. Come on. NLY. There we go. And this is a capital management company. Interesting. Okay, I'm not familiar with. Oh, it's a REIT. Okay, that makes sense. It's a mortgage REIT. Another thing. Look at this chart. This is the weekly chart. I know that everybody's looking for yield, and I understand that definitely. And this one, has a nice cash flow. It has a nice return of equity, 13%. But you know what? I don't like this. I don't like this area. We have declining sales. We have declining profits. I can't see on this one. It does have a relative strength of 42. I just think you need to avoid this one. So here's the thing I would do on this one. I just probably would avoid it just because it's in a downward trend, and there's just a lot of things that are not to like there. So NLY, I would avoid. So I would just avoid this one, just because it's just, oops, that's team. I would avoid this one. It's in a downward trend, and that's the problem. You just, again, this makes this makes it really tough. It makes it really, really tough. All right, let's look at this. I think oil is about to go. I think you're probably right, but don't buy it prematurely. Don't buy oil prematurely. I think you're right. It probably is. Let's check out. Yeah, I want to check on the XLE, and this is the Spider Select Energy ETF. And what's interesting about this one, of course, is that it covers an awful lot of stuff. Here we go. Yeah, I think you're right. I think you're right. I think we're starting to see a bounce off the 200-day moving average. You really don't want to buy anything below that 200-day moving average, because the problem is if it doesn't get support at the 200-day moving average, many times the stock will just continue to go down. So we want to see support at the 200-day lines. Definitely check the box there. At the 21-day line, it looks like it's come right up to the 21-day line. And it's off a little bit in after hours, but I think you're right. I think we may see a bounce here. I think we may see a bounce here, but you want to day trade this one, possibly from about 71 on up here. And I think you could trade it right up to the pivot. So I think at least from 71 to 80, I think we're going to see it probably move in this general direction. That would be my guess. But again, it's still pretty speculative. This is how I would play it. I wouldn't play individual oil stocks at this point. It's just too tough. Too tough. Matt has a question on LSCC. Let's see about LSCC and see what's going on there. Okay, Lattice. This is another great company. I just wish that the sector was stronger. Right now the sector is just very, very weak. Lattice Semiconductor. Let's draw the reversal line. And we have a nice reversal line coming through here. So it definitely has moved in an upward trend if we look at it. And again, what I'm doing here is I am drawing a reversal line. And what this does is this shows us, is it broken the downward trend? And it definitely is starting to break the downward trend. This was in a downward trend up until about last week. And then it looks like it's turning higher. Now, the question is, will it continue on this track? Well, one of the things that's a little bit worrying for me is that this is a little bit of a tight slope, so I suspect it to pull back probably to the 21-day line. So let's see. Here's the thing. If you want to buy this one, and I wouldn't recommend it right now because it's this group is in the bottom third of the market. So I really wouldn't want to buy it there, but I would wait for it to pull back possibly to a minimum of the 21-day line, which is about 50. So right now at 58, I wouldn't buy it here. It's too high. I would wait for it to pull back. So if you want to buy it, I would buy it with a limit order. So this is how I would approach it. If I was going to buy LSCC limit equals, and I'm going to say about 50 on this, because this is the 21-day line. So if I was going to buy, if I was going to buy this one, I would do a limit buy order at about 50, and that's going to give us right about here. This is where I think you might be able to buy it. I do think this is going to pull back, and if it does, I think then you want to be buying it right about 50. I do think this is going to pull back, my guess, and then I think it should get some support at this reversal line. So we'll see if that's the case. But right now, I wouldn't be a buyer of it. Just too extended for me. And in this market, you just got to be super careful about getting in to it right. Jeet is asking about Tesla, and this is also real interesting. Again, I would not be a buyer of Tesla at this level. I like the company, of course, but it is a little bit. There we go. It still kind of has a lot of overhead supply. So let's go over to the Tesla chart, and basically, what's going on here with the Tesla chart is that. We have, it's moving up nicely. It had a nice bounce. It looks like it had some good earnings. I'm really concerned about the Chinese market, but the one thing is about Tesla is it's not really going to affect it because they have a full order book. So they're pretty much delivering everything that they're building, which is good. And they do have some supply chain issues, but far less than the other manufacturers. So I think their sales are going to continuing to be good. Here's the problem, though, I see with Tesla, at least for right now. At about 900, that's the last pivot. That's right about here, if I can draw it right. There were a lot of buyers above that here. You see this is the area that they bought in. Many of these people are still owners, and as the thing goes up, they're going to be tempted to sell and get out of Dodge. So I think there's a lot of overhead supply on Tesla, and I think you got to be super duper careful with Tesla. So I would not be a buyer here with Tesla. I'd wait a little bit on this one and see. Meta may be a little bit different story. Let's look at Meta. And let's take a look, see if there's a better look-see on Meta. Yeah, Meta, again, problematic here. You have a downward trend on this stock. I would be careful here. Even though it's starting to turn up, it's still got a relative strength of 19. That just isn't good. And the trend is down on this one. So I wouldn't be a bottom fisher here. And I think that's really what you're probably asking. I wouldn't bottom fish. And this is hard because, you want to get the best price. But here's the thing. I've rarely been successful in buying at the bottom. It's better when I'm buying in a trend. I've always been more successful seeing the trend, jumping on the escalator and going up. Unfortunately, we may have hit the bottom for Meta, but we may not have. Because even though the numbers are really good for this, and they are making profit, Meta is making very good profit, we're still moving down. So I just wouldn't be a bottom fisher here. I just think it's too risky. I think that I think it's better to keep your powder dry, and just kind of kind of go that way. We have a question on ARK in ARKK. Of course, this is the Kathy Woods ETF ARKK, and she was a hero a year ago, and hero to zero, right? That's kind of how the market is. Right now, this is not a very. I don't think this would be a very good one to be in. Relative strength of 15. A big holder of Tesla stock, of course. But look at this trend. Just not. Again, you're on a down escalator here. You don't want to be on that down escalator. You just want to, be on an up escalator. That's what you got to find. You got to find something that is moving in the right direction. And this one, unfortunately, is not moving in the right direction. So here's the thing I'd say about ARK. I would not be a buyer of ARK right now. Right now, the action is in medical, in biotech, not my favorite areas of the market. But there is a way you could play them. Is called the BIB. It's an ETF that is in the biotech space. It's been doing fairly well. I wouldn't be a buyer of it. That's one way you can do it, but it's really a stock picker's market out there. You just got to look for the super duper strong stuff out there. And it's so difficult because really there's not as much strong stuff, as we would like to see. I mean, it's just it's very tough. Let's kind of look at the treasure map here. I call this the treasure map because this a lot of times can give us some good insight. But let's look at this one. And this is the industry group strength map. And I want to look at that and kind of go over that with you, just to kind of show you where I think, we can go look for some strength in this market and some tickers that we might want to take a look at. So I'm going to look. This is for this last week. See if I can get that to come up there. Coming up. All right. Should be up here in just a second. And still waiting for it to. There we go. Sometimes I get a little bit of issues, as you know, on the bandwidth. So let's look at the industry group strength. Industry strength here. Let's give us another chance. There we go. Share the screen. Yeah. Trying to share the screen here. Having a little bit of difficulty with the bandwidth. Not quite enough bandwidth here. There we go. Share screen. And hopefully it'll give us the ability to see this in just a second. So thanks for bearing with me here. All right. Took a little bit longer than we normally like to see. Here's the thing with the market in terms of the strength of the market. Currently, the industry stocks are still number one. What I'm doing here is I'm moving this forward here to kind of take a look at where the strength in the market is currently. Currently, the number one area is oil and gas royalty trust, but not a very exciting sector. Most of these other ones are oil or they're solar. The retail mini market area is doing well, and the wholesale drugs are doing well. So retail mini market, very interesting area of the market. That is doing very, very well, and this is kind of where I'm seeing some of the retail come in here. Dollar Tree is one of the discounters in there, I think, as well. That's kind of where we're seeing it. One of the strongest areas of the market right now is medical wholesale drug suppliers, and this area has McKesson as one of the players here. So if we can look at McKesson, let me just pull over to McKesson. See if I can get McKesson up for you. Yeah, maybe I can. Yeah, there we go. So MCK, and this is a stock that you should probably take a look at. I'm definitely going to be looking at this one. Come on. All right, McKesson. Very good. This has been pulling back as of late, but I think this is going to make another run here. We had it pull back, and then we've kind of consolidating here in this area. This is one I think you should take a look at. I'm not an owner of this one. I was stopped out of it. I bought it as it was approaching the pivot. I had my 5% in there. Boom! I was pulled out of it. I actually had 3%. So I was stopped out of this one, but I'm looking to get back into it if I can get some support at the 21-day line. Now, let's take a look to see where that 21-day line is. I'm basically right at the 21-day line. So I'm looking to possibly buy a position with this one. It's not a very exciting stock. It's an expensive stock. It's a $300 stock, and I don't think it's necessarily going to be making any huge movements because it's a very mature company. But I think that it is going to move higher, and this is where the strength in the market is. There's just not a lot of strength out there. Medicals is really the best area right now in the market. So it's really tough. Here's Charles. Could we spend some time next time on the show, produce a presentation on past positive mentions? Oh, okay. I would have to compile that, but yeah, I mean, I can definitely take a look and see, Charles. I probably should be keeping a lot better records of this, and which ones have done well and which ones not so good, which ones not so good. But that's a very, very good suggestion. I should be keeping track of this. I do keep track of this with a small portfolio. Unfortunately, I had a system error on the small portfolio, and I lost a lot of my data going back a while, but because some of these have gotten stopped out. It's just been a tough market, but I will definitely go back and take a look at some of my past mentions. And if you could, any ones that you're particularly interested in, I can definitely put that together. I should be keeping better records on this as well. You're absolutely right. But I typically show what I own in the small portfolio and sort of how that's doing. And this is my current performance. Basically, this is my weekly performance right now. I've been in cash for quite a while. I've had some shorts that have done fairly well, mostly, and then I'm now starting to come back into the market. So I'll definitely try to put that together for you, Charles. That's a very good suggestion. All right, so far with me, you're okay, very good. Thank you, man. Appreciate it. I mean, it's hard. I mean, it's tough. I mean, a lot of this stuff isn't all that good, but we try. We try. This is a tough market right now. Much harder than it was last year or the year before. But we're getting better, and the whole idea here is to try to find stuff that's going to make money. So I really appreciate that. All right, probably the last questions here. Let's take some from TikTok. Or you think we're done with the bear market? No, I wish we weren't. I don't think so. Unfortunately, I wish. I think the bear market is going to go on for a little bit longer, and that's so sad. But so sad. Okay, let's cover Google and Amazon because they both split. That's a big thing. So let's look at Amazon, AMZN. I'm not currently in Amazon. I'm kind of predicting, and this may sound counterintuitive here, but typically after a big split like this, you see the stock pull back for at least a few months because it's digesting the split. And what I mean by that is that many people that get those split shares, they sell off some of those shares. So there is some downward pressure on the market. Now, in terms of Amazon, earnings are very soon. We did have a nice bounce today, but here's one thing I want to kind of warn you on. The volume was low on this. So we do have some people that seem to be buying it. I still think this is I think Amazon is weak. It's below the 200-day line. It has moved above the 50-day line, but I still think it's weak. I mean, even though we're starting to see it move higher here, I just would be a little bit concerned. We are off a little bit after hours. It's so interesting to see Amazon now at 122. It's just amazing. Now maybe I can buy a share or two. It was so expensive before. I could only buy like a few shares. It was amazing. It's just amazing when you have a split like that. What do I think the trend is on this one? I'd be careful, and why? And the reason is, internet retail is one of the worst performing sectors, 167 out of 197. So it's in the bottom third of the market right now. I wouldn't be here. What happens in a recession, I think, is a lot of people that were using the luxury during the pandemic of ordering off of Amazon and getting Amazon Prime and all that stuff. I think a lot of them are going to be going to Ollie's and Dollar Tree because it's cheaper. It's sad, but it's just true. So I think that's definitely going to be a trend, and I think the trend is to the super discounters that are physical stores. Actually, at least in the near future, because people are they don't have a lot of money, so they're going to these stores and they're buying what they can, and I think that's going to benefit Dollar Tree, that's going to Dollar General, those kind of stores. I think Amazon's going to be a little bit tougher sell there because of the delivery expenses. I mean, it's very convenient, but a lot of people are just, there's going to be in the next few months, especially in the tech world, there's going to be a lot of layoffs. So. Yeah. And what do I think about Google and Alphabet? You know what? It's off after hours. It was up very nicely today, but on weaker volume. So here's the thing. It was only up 7 cents. Here's the thing on Google. I think you're going to see it, at least for the time being, I think you're going to see it pull back. That's my thought on that. Let's go over to an area that we do know is strong, and that, of course, is Dollar Tree, DLTR. At least for right now, this is doing very, very well. It's in the super mini market discount chain area. You can see how nice that chart is. Let's look at the overall. This is number 4 out of all of the discount variety stores. So let's look at the whole area of the market. Let's see if we can give us that retail. Well, it's not doing it. So let's see if we can go to the retailers here. See if I can pull that up. Maybe. It's just not being very cooperative today. I don't have enough. There we go. All right, so let's look for the strong. Let's look for the strongest areas in the market. And what I'm doing here is, hopefully this is going to let me see it. There we go. Industry groups. Okay. And what I'm doing here is I'm looking for the strongest industry groups. And right now, one of the strongest areas of the market, believe it or not, is in this retail, discount retailers. Okay. And that's number 4 on the list. So it always is a good idea, I think, to go hunting for big game. This is in the retail discount variety. In the areas where the hunting, the best fish usually come from the best fishing holes. This is, believe it or not, the number 4 area in the market, retail discount and variety, and this is number 4. This is starting to make its move. The top stocks in this, of course, are BJ's, Dollar Tree, Grocery Outlet, Dollar General, Ollie's Bargain Outlet. Let's look at I think that Ollie's is also one that I'm very interested in. Let's see. Ollie's. This one is a potential buy here, I believe. It's starting to make its move. It's called Ollie's Bargain Outlet. I don't know if you've seen one of these. I actually went by one of these here there's one of these in Mesquite, Texas, which is close to where I live. And again, it had some very strong, okay. Oh, come on. Ollie's Bargain Outlet. I'm just having a lot of issues with the bandwidth here. There we go. Okay, so I think this one is getting ready to reverse higher. It was up a little bit today, about 0.5%. I do think it's going to start to move higher. I wouldn't buy it here because the relative strength line is pointing down, but it's 95. That means it's in the top 5% of all of the stocks right now. It is extended, so you can't really buy it here. I wish we could. It's extended. You see it's above. Basically, the correct place to buy it was down here at 55. But this is the kind of area that I'm still looking in. Dollar Tree is still in the buy zone, by the way. All right. Well, I have run through most of the time here. Thank you so much for taking a look at my show. I so appreciate it. If you could, it really helps me a lot. I'm trying to build this brand up with some success, thanks to you. It's still going pretty slow, but I do need your help. And the help, of course, is by liking the show. By liking the show, of course, it gets it out there to a lot of people. So please smash that like button. I really appreciate it. Also, if you're not already a member of the Action Trailer, it's super duper easy to get on the list. Just go to www.Dallas Trading Floor. I'll be back tomorrow at 5. Thanks so much, and I will try to cover as many symbols as I can. We'll see. Be careful tomorrow. I think with this Chinese bank news, we could see a really strange day tomorrow, because I think they may have a implosion in the Chinese banking sector coming. So that might be a really weird thing. Just be super careful out there. It's probably best to stay mostly in cash and buy only when the chart is really strong, because try not to buy extended in this market. It's so hard not to do this. But try not to, and I'll try to present as many setups as I can. I'll try to look and see what the best setups that I can find are. So until tomorrow, thank you so much, everybody, for tuning in. I really appreciate it. Please tell your friends. I need more subscribers to stay on the air. Happy trading.